Hello viewers, I am Sanjeev Pandya welcoming you to the Tax Talk with Ajay right here on ITV Gold. This weekly show brings you all that you need to know about taxes, personal taxes or corporate taxes or any matter related to your taxes, because tax season is upon us. We are in the middle of the tax season, and this is the time that you should be educated when it comes to taxes. You should know exactly that what's happening, what kind of deductions out there, what are the tax credits, how much refund can you get, how can you do your taxes right, all these things that you should really know. And that's why we bring you this show, to get you all the latest information that you need to know. And we'd like to thank Sai CPA Services for sponsoring the show. Sai CPA Services is a full-fledged accounting firm. They also do bookkeeping, payroll, and many other tax services, as well as they guide you on your tax advice and investment, where you can save money on the taxes. But most importantly, Sai CPA Services is known to do taxes right for their clients. They have 3 offices here in state of New Jersey. You can contact them at 908-380-6876 or visit their website, saicpaservices.com. No question is a silly question, and you don't need to wait that long, because time flies, and before you realize, the tax deadline will be here. So give them a call now, over the phone, in person, consultation, meetings, everything is available for you, and their knowledgeable and experienced CPAs on hand will definitely guide you in the right direction. Now, to take us in the right direction when it comes to taxes, none other than Mr. Ajay Kumar of Sai CPA Services. I'd like to welcome him to the show, sir. Good to see you.
Thank you, Sanjeev, and thank you for the kind introduction.
Sure. Busy season, huh?
Extremely
busy. Of course, AJ always stays busy when it comes to tax season, or even after tax season, because CPA Services, they do many things. When it comes to taxes, as I say that, tax season is upon us, right? So tax season here, now everybody wonders, and actually I should tell you, many people don't even understand that what deductions that they should get, what
Absolutely.
Deductions can they get, how does the deduction work, and what exactly is the difference between deduction and tax credit.
Understood.
People are confused. They're going to say, okay, do it whatever they want to do. So let's educate them a little bit. Let's start with the taxpayer deductions.
Absolutely, it's my pleasure. So before we delve into actual deduction, I want you to know, if you miss a deduction, if you don't claim what you're entitled to, IRS will not come back to you and tell you, hey, you forgot to claim this thing, here is your money. But if you claim more than what you're supposed to claim, IRS will send you a notice that this is what you claimed, you should not have claimed, here is your interest, here is your penalty, and here is what you owe in the taxes. So the onus, the responsibility remains on you, the taxpayer, to do your taxes right, to claim the maximum potential refund that you can claim. Now, talking about deduction, everybody's situation is different. I mean, we can give you some general advice, but depending on if you say personal tax, if you have W-2, if you have 1099, consulting income, if you own an LLC, a corporation, the deductions could be vastly different. But what's applicable to everybody is medical expenses. If you have medical expenses, you should claim medical expenses, even though the misconception here is the medical expenses are only allowed if they are more than 7.5% of the AGI. True, that's the federal side, but how about the state side? There is no such limit on the state. If you have medical expense, just put it on your Schedule A. Don't worry about the 7.5%. You can still save a couple of $100 on the state side. Moving on, there is a property tax. A lot of people say there is a property tax limit. Maximum you can claim is sold is $10,000. Still, put in the right number. You can use PTET, pass-through entity tax, if you have an LLC or a corporation or an S corporation, a flow-through entity to say. So the idea here is, don't worry about the computation. Don't worry about the rules. If you have the expense, you put in the expense in there. Mortgage interest, home equity line of credit, charitable donation, all these things, gambling losses, they can all be claimed. Please understand, gambling losses can be claimed to the extent of gambling income. So you will see a lot of rules around it. But the idea for a normal person who does not understand taxes is to put all your deductions in the system, or let the accountant know everything so they can make the right call for you.
All right, so that's a tax deduction. Let's talk about tax credit.
Absolutely. So credit is an amount that's given against your taxes. Let's say if you owe $5,000, the tax credit is $2,000. Let's say the child tax credit is $2,000. That will reduce your tax liability by $2,000. The deduction reduces your taxable income. The credit reduces the tax liability that you have. Let's say if somebody is making $100,000, they have $10,000 of property tax deduction. Now their taxable income is $90,000, and based on $90,000 they owe $12,000 in taxes. Now they have two children. They are getting $4,000 in child tax credit. Now this $12,000 in our example goes down to $8,000. So the tax credit reduces your tax liability or increases your tax refund, while deduction reduces your taxable income.
Okay, now tax credit. You mentioned, in the example, they have two kids and they get the tax credit. Tax credit is only for the children?
No, there are a lot of different type of tax credit. You can have EIT, earned income tax credit.
Correct.
You can have electric vehicle tax credit. You can have home energy efficiency tax credit. So there are a lot of tax credit. In general, the principle is that tax credit will reduces your tax liability or increase the tax refund, while the deductions will reduce your taxable income.
So any tax return for any taxpayer, they will be eligible for some kind of tax credit.
Most people are.
Okay.
Unfortunately, most people are not aware of all these tax rules, tax laws. So a lot of times people miss.
No, if they're not aware, that's one thing. But who's not eligible? Who does not get tax credit?
Well, there could be a specific situation when people, let's say a couple has absolutely high income, so they don't qualify for earned income credit. They have no children, so they don't qualify for child tax credit. They live in the same home forever. They have not made any improvement, so they don't qualify for the home efficiency tax credit. They did not put the solar, they don't qualify for the solar credit. So there could be a specific situation when people do not qualify for certain credits. There are plethora of credits, there are a lot of tax credits. Depending on your situation, you have to look at it the other way around. What credits do I qualify for?
Okay, I see. All right. So most likely any person will qualify for tax credit. All right. So you explained it well. Once again, tax deduction reduces your taxable income, and tax credit reduces your tax liability. So that way it actually can increase your refund.
Absolutely.
And that is the key point that we learned from Mr. Ajay. Now, while we're talking about taxes deduction and small taxes deduction and tax credit, let's talk about filing taxes, the deadline, and why people should file taxes sooner than later.
Absolutely. So the tax filing deadline for S Corp or multi-member LLC is March 15th, which is coming pretty soon, in a week or two. The tax filing deadline for a single member LLC, C corporation, large corporation, and personal taxes is April 18th this year. You should try to file your taxes sooner than later. Let's say if you have a refund, you want the refund now, sooner than later. So you should file it sooner. If you owe the taxes, you can still file it now and pay it on April 18th. You don't have to make the tax payment along with your tax filing. You can choose a date. You can schedule a date till April 18th, any date. But by knowing the liability, if you owe anything, you can plan for it better. So it's always a good idea to file the taxes sooner than later.
Okay, interesting. Now, so these are the taxes that in general we talked about taxes, the deductions and the credits and everything else. Now let's talk about small businesses. As I always say, Sai CPA Services advises not only clients, not only individual taxpayers, but as well as the small business, mid-sized business owners as well. So my question to you is, how do you guide a small business owner in the tax planning so that way they can save money on the taxes?
Absolutely. So it's a big question. Let's start with what expenses a small business can claim in general.
Correct.
Then we expand it to the tax planning level. So in general, when we are talking about a small business, we have this question every day. What expenses can I claim? Can I claim the phone expense, the internet expense, the travel expense, the meals expense, home office expense? First thing, you want to know if you have a W-2, no 1099, no business. You are not allowed to claim any of these expenses. on a W-2, on a salary, you're not allowed the travel, the phone, the internet, the home office. None of these expenses are allowed for a W-2 type of situation. If you have a small business, an LLC, an S corp, a single member, a multi-member, whatever business you have, you're allowed all the expenses that are related to that business. The simple thing you can do, close your eyes, ask yourself, would I have had this expense if I did not have the business? And if your answer is no, I'm having this expense only because I have the business now, that's a fair business expense. It includes paying the accountant to start the business, if you had to buy phone or expand the phone line, if you had to buy a special internet line, if you had to buy the car or lease the car or special uniform that you have, if you are renting an office space or leasing the office space, all these expenses are fair, legitimate expenses. What's gray area here, in a lot of cases, having a couch, buying a couch could be a business expense. I have a couch in my office. So for me, buying the couch is a business expense. But if you're running from home and you don't really have clients visiting you on a regular basis, then it may not be the right thing for you to do as a business expense.
All right. So with that note, let's take a break. And when we come back, viewers, we're going to continue to educate you when it comes to taxes right here in the Tax Talk with Ajay show. Welcome back to the second half of the Tax Talk with Ajay right here on ITV Gold. Before going into the break, Ajay was giving us all the information, basically educating us when it comes to taxes, standard deduction, tax credits, and then we talked about the tax deadlines and why you should file your taxes sooner than later. It's always a good idea to file taxes sooner, even though you may have to pay something, but whether you pay now or a month or two later, you have to pay. So plan it accordingly, but make sure you file your taxes and make sure you file it accordingly. And Sai CPA Services can help you to clear any confusion that you have regarding your taxes, personal taxes, corporate taxes, doesn't really matter. You can reach them at 908-380-6876 or visit their website saicpaservices.com. Before the break, AJ started to tell us about the small businesses, that how Sai CPA Services helps small business owners to minimize their tax liability and to plan them. So it was just a halfway through. Now we're going to continue the same topic and then we're going to know from AJ.
Absolutely, Sanjeev. So we talked about the expenses generally that you can claim under a small business. Now let's talk about the tax planning for a small business. A lot of small businesses are too busy making things happen, doing things. They don't really think about the tax planning or the financial planning. It's very important for a small business to go to the accountant before the year end to see what can be done. September, October is the best time to do the tax planning and financial planning. By September, October, you already know how much profit you're going to have for the year. Now you know if you can do some retirement planning, some SEP contribution, some 401k, some IRA contribution, or if you can spend money. Say if your business is cash-based business, not the accrual-based business, then you have to spend the money before December 31st to count it as an expense. Maybe you can upgrade the equipment, you can buy new laptops, but you have to know how much profit you are making. By September, October, you have fair idea for 9 months, 10 months as where you are, where you are heading, and then accordingly you can see last year I showed X profit, this year my revenue grew to 2X, so I want to show a little bit more profit, but my profit is so much, now let's do some tax planning. Let's spend some money, let's upgrade certain things. If you have to upgrade certain things, then why wait till January? Why pay the taxes now? If you can move that expense from January to December, you can save some money. Then you can do some retirement planning for the employees, for yourself, SEP, IRA, 401k, defined benefit, defined contribution. There are so many plans out there that you can use depending on what suits you, depending on your situation. But all these things have to be decided not at the tax time. For a lot of these things
before the end of the year.
Before the end of the year.
Because it's a planning, and a planning must be done before the end of the year, so that way they know where to invest money, where to put money away in order to save taxes. Now, viewers, mind you, this is the right way of doing it. There is nothing that you're cheating on taxes or you're hiding anything for taxes. This is called tax planning in order to minimize your tax liability. And the money is put in somewhere, it's going to be safe anywhere.
Absolutely, Sanjeev ji.
Now, excuse me. All right, so now the next question I have is that lately I've been hearing a lot on TV, on radio, and on social media, ERTC, Employee Retention Tax Credit. That's what it is for? Is that what it is? What is it all about? And they're saying that an owner can get $26,000 per employee?
In theory, that's true.
Yeah.
But let's take a step back. ERTC, Employee Retention Tax Credit, is a credit that came after the COVID. Initially, if you received PPP funding, Paycheck Protection Program, you were not allowed to apply for ERTC. Then later on, they changed the rule that you can still apply for ERTC. Right now, there are a lot of companies in the market. There are more ERTC specialists than the insurance agents, if you can believe it. So these mushroom companies, I call it, they're coming in the market and they will say, we will get you the ERTC and we'll charge you 20%, 15% of what you're getting. This is the rule here.
Okay.
And a lot of these companies are applying for ERTC for small businesses, taking their 20% commission, and then they will run. The deadline for ERTC is March 31st, 2024. So they still have 1 year. In 1 year, they will make a lot of sales, then they will fold the shop and you cannot find them. So if you qualify, if you want to apply for ERTC, don't go with an ERTC company. Go for the accountant who has been there with you forever. Go with your CPA. Don't go for this ERTC company. They're charging 15%, 20% of the total benefit. It will not be possible for you to find these companies. The rule for the ERTC is twofold. And I'll tell you where the gray area is.
Sure.
The first rule is if your business was affected by COVID-19, then you qualify. If you had partial shutdown of your business. The second rule is if your 2020 quarterly revenue were 50% lower than the same quarter in 2019, or if your 2021 revenue were 20% down for the same quarter in the 2019. A lot of people, a lot of business do not qualify based on the financial, but every single business in this country can claim that I'm affected and I was partially shut down. My business was partially shut down. Accountant, even though I'm considered as an essential business, I have seen doctors' offices applying for ERTC even though the doctors' offices are essential business. The claim they are making, or these ERTC, these mushroom companies are making, that your business was affected and your business was partially shut down. Everybody. See, if that was the rule, then there is no need to make the rule. You can say every business qualify. Then what's the point of creating the financial criteria for qualification? So we are advising people to be very careful when it comes to the ERTC. In the last estimate, IRS is estimating $2 trillion, not million, not billion, $2 trillion have been given out fraudulently. So there is so much fraud going on. The way the IRS system works is an honor-based system. You claim the credit, they will give you the credit. And then it will take IRS 12 to 18 months to do the scrutinization, to check your file, and then say you claimed it wrong. Now we want the money back, we want the interest, and we want the penalty.
All right, so here I have a question. Sorry to interrupt you. Once you apply for ERTC, let's say you mentioned don't go to mushroom companies. It doesn't really matter whether you go to this mushroom company or you go to your accountant. You apply for ERTC. And $26,000 is the maximum per employee, right? You can get. Once they apply, how long does it take for them to get the money from you?
Typically 3 months.
Typically 3 months.
But
it takes them 12 to 14 or 16 months to go through your records.
Absolutely. A lot of people are applying for it. Right now, the intention at the time of making the rule was we want to support the small business. As soon as you apply, within 90 days, we'll give you the money based on your attestation.
I got it.
You are signing, if my claim is wrong, I'm happy to pay 20% penalty, interest, and everything else that goes with it.
Really? A year later, whenever they come
you have you have 6 years.
Okay, so now let's say that part doesn't even come in and you get the money after 3 months. Now everything is okay, it's all legitimate, it's a really valid claim that they got the money. Do they have to pay it back to IRS in the future?
No.
This is the money to keep.
Absolutely.
So on top of a PPP that they had come out with it and spent trillions of dollars, on top of that they are spending another $2 trillion.
So they have already given out.
PPP.
Fraudulently, they have
Yes.
given, no, just for ERTC.
Okay.
more than 2 trillion has been given
Correct,
out.
correct.
2 trillion belongs to the fraudulent claims. 2 trillion is the number that was given out for under the fraud,
Wow.
where they are estimating that these people should not have applied, but they applied, and now they are getting the scrutiny. IRS has 6 years. Typically, it takes 12 to 18 months. That's why a lot of these mushroom companies will not be around after March 31st, 2024. They will fold the shop and they will move on. So consider a situation. If your claim is $100,
Oh,
you got $80 now because $20 the mushroom company took it
Yes.
from you. In 12 months, you have to pay 20% penalty on $100 plus the interest. So you got $80 now, and if your claim is not approved, if your claim is fraudulent, you will end up paying $130, $140 on $80 within 12 months.
that's it. Wow.
So it could be really, really bad for the business. You have to be extremely careful. If you qualify for ERTC, and you should verify with your account.
No wonder people are getting a lot of money from government.
Absolutely.
No wonder, and the stories always come out. The lifestyle that they live in, and they spend
There
the
is a lot
money,
of frauds going on in the market
spend the
right
money on their own personal belongings and luxurious things and whatnot. This is very interesting. Okay, talk about luxurious thing. Let's go to another topic now. When it comes to luxurious thing, one luxurious thing right now, luxury thing out there, and it's very popular. It's EV. Electronic vehicle.
Absolutely.
What is actually a deal when it comes to credit given by the state or the federal when you purchase EV?
Well, a lot of electric vehicle credit was always there.
Mm.
There are some changes that they have made recently. Electric vehicle credit was not available for some mean car dealers like Tesla. Now, under the new rule, even Tesla qualifies for electric vehicle credit. The federal electric vehicle credit is $7,500 for a new car and up to $4,000 for a used car. The used car credit was never there. It's a new thing. So $7,500 and $4,000. If you buy a regular sedan, the price of the car has to be under $55,000. If you're buying an SUV, the car has to be under $80,000. There are some income limitations as well.
You say for used car it's a $4,000,
$4,000.
and for the new car is $7,500.
$7,500.
Okay.
There are some income limitations around it. For a single filer, your income needs to be less than $150,000, and for a married filing joint type of tax return, your income needs to be less than $300,000. So there are a lot of rules around it, but it's a tax credit, not a tax deduction. You get the refund back, or it reduces your tax liability. So you just need to understand the rules around it to see if you qualify for it, and if you do, you should try to buy the car before March 31st of this year.
That's when it expires. Well, when it expires, what are the chances of government continuing that?
It's quite high.
Because it goes back and forth.
Absolutely.
They
The
stop it, then they
possibility-
come back. They stop it, and they come back.
Absolutely. But we don't want to be letting the viewers know that that it will be renewed. That will be misleading. Right now, this is the rule. The government has the right and typically changes the rule whenever they can. So it can be extended. Right now, it's up until March 31st only.
All right, good to know it can be extended. Viewers, I must say that I wish our show can be extended more than 1 hour, especially when the tax season is upon us. But it doesn't work that way because ITV Gold, they have a very tight schedule, and your favorite shows are lined up one after another. So as you get ready to watch your favorite show next coming up, just want to remind you about your taxes, personal taxes, corporate taxes, payroll, bookkeeping services. Sai CPA Services is your one-stop. Give them a call and see how they can help you out. 908-380-6876 or saicpaservices.com. Ajay, thank you so very much once again for your guidance and advice. I am Sanjeev Pandya. Until we meet again, same place, same time, right here on RTV Gold. I wish you all happy and tax-free days ahead. So long.
Thank you.